I'm the Chief Investment Officer and founder of Rosso Asset Management. We've been in business 26 years. I have a very different perspective than almost everybody else in the market today, rather than going to the Chinese, because the Chinese would buy us out in like 2 seconds here.
Now, sort of also a bit more of a general question. When you look at companies and specifically at management, how do you make sure essentially or find out, because information sometimes is scarce on a lot of people, right? How do you find out if the person is shady, and what are some of the schemes being pulled within the resource sector that you have seen in the past years that are sort of worth mentioning?
Oh, well, okay. Yeah, management, that's a tricky one, right? I think what you do, like if it's not a name brand person, like somebody from, let's say, the Discovery Group or from the Lundin family or something like that, where they're generally a known commodity, they've got a strong history of success. That's tricky. So what I try and do is I meet the person. I've met so many liars and cheats in my day that I can pretty tell almost right off the bat. And then if the project's good enough and the guy's a tiny bit shady, I just put a little bit of money in. Then over time, I try and get to know them a little bit better and see if they say this, did they do that over time? So over time, if I get comfortable with them, I'll give them a little bit more money. But oftentimes it's just a matter of meeting management, whether that's on a site visit. I find are very useful. Not only do you learn a lot on the site visit, but you also learn a lot by integrating. Having dinner with the CEO at a plywood table up in a tent up in the mining site, right? So sometimes retail investors don't have that, but so I encourage retail, whenever you have the opportunity, just get out there and meet management. Listen to as many presentations as you can. What's really good these days versus when I started was there's tons of podcasts and interviews. But if you meet somebody in person, that would be good. And after a while, I think most people, you could develop a sense as to whether, the guy's shady or not in what they say and whether they overpromise and underdeliver. That's probably the biggest red flag out there. A lot of management teams still think how, overpromising and underdelivering works, and that does not work. I like the guys who underpromise, overdeliver, and yeah. So the next question you had was, what kind of scams, what kind of things have I seen recently? They're not all scams. I'll give you just some examples, and I'm just coming right off the top of my head here. We had one CEO who I absolutely can't stand, and I've crapped all over him publicly a bunch of times, but he's a number of years ago, I found out that he owned half of the helicopter company that his firm was contracting to do all the helicopter work for the mining company. And he was bragging to friends of mine on the golf course that he owned half the helicopter company. Well, I'm going, gee, I wonder if that pricing is all that competitive, and whether, it's just a way. So what happens is a lot of these guys, they like to strip money out of the company every way they can. So that was one example. I know of another example. I don't want to name names because I'd rather not just get sued. I don't mind getting sued by, anyways, whatever. The one instance where, health and safety required there to be an ambulance on site of this one mining property, right? So what did the CEO do? Well, he went out and bought an old beat up $400 pickup truck, threw a cap on the back of it and put a stretcher in the back, and then rented it out to the company at $400 a day. So this guy's sitting there, 100% return on equity every day. Unlike his mining company, he had a better ROI on his piece of crap ambulance he was renting to the company, right? And then the same guy, he was renting pickup trucks to the company by the hour. Like, pretty shady guy. And those are just the things I just come across in my travels, let alone when you lift the hood up and you just go, okay, what other stuff? Like, so these CEOs, these CEOs, I've never seen them strip money out of companies. I remember a buddy of mine telling me another one too, where, it's typical, in the old days, I don't know to what extent it still happens, but where the head of exploration, he's choosing between drill companies and he says, well, how much of a kickback do I get for every meter drilled, right? So there was a lot of that going on. I'm sure some of it happens today. I've seen instances where, bribes have been paid, and, bribes and kickbacks and just theft from the company and all sorts of crap like that. So I've seen tons of it out there. And yeah, there you go, the mining business. I imagine, I don't want to pick on the mining business too much. I'm sure if you look at some other industries, they could be shady too. But the mining industry has a rich and colorful, shady mining history. As Mark Twain said back in the day, right? Uh, uh, a gold mine is a hole in the ground with a liar on top, right? So mining has a rich history of lying to people and stealing their money. Yeah.
And just sort of moving a little bit into commodities now in general, what are some of those that you find interesting at the current moment? Is it perhaps uranium, which you have mentioned that you don't like it as much right now, or perhaps other ones?
Well, yeah, let's talk about uranium just for fun, okay? So I spoke at a conference. I won't name the conference, about a year and a half ago, right? They don't want me back anymore because I was the only person who was trying to rein investors in, right? Because it's going to $200 a pound, and I was going, I'm bullish on uranium, but I don't see 200, and but the uranium bulls out there are just absolutely insane, pounding the table. $200 uranium. If you inflation adjust the 140, whereas actually I think it was 138 that uranium hit last cycle. Well, if you inflation adjust that, that's $200. So I said, you guys, come on, man. It hit 138 for a nanosecond with it. I forget the exact teeny tiny amount of poundage that traded at 138. And now you're going to extrapolate that with inflation? Are you guys crazy? And then I found out that, I'll give you an example, right? There's this guy, Quakes, right? I'm not sure if you ever heard of him, but he's a super permanent bull. And I have some suspicions as to who he is and his true motivations. But he's been pounding the table on fission uranium forever. Fission uranium 10 years ago was trading at a higher level than it is today, right? And talk about value destruction. So 10 years, they apparently made a discovery, they think, right? And somebody else wants to go and buy them, right? And this guy online is just pounding the table on uranium, pounding the table on fission uranium. Well, great. After 10 years, you're down money like this. And after a uranium bull. And then you look at all these bulls going, the price of uranium is going up. And it's going, well, I'm actually quite disappointed in the ability to manipulate markets. Well, here's where I'm coming from, okay? Like, you probably never heard of the Hunt brothers, right? Are you aware of the Hunt brothers? No. Well, if you Google the Hunt brothers and silver, they tried to corner the silver market, right?
Oh, yeah. I think in the 80s. I think it was in the 80s, right?
And they got in tons of crap for doing that. Okay, so I remember about 6 years ago when I was a shareholder in NextGen, I was telling anybody who would listen, I said, man, if I was a hedge fund, I'd go in there, I'd go out and I'd buy every single uranium company you can. Then I'd go in there and throw up several $1 billion at the spot market and just jam the price of uranium up and make yourself right. Right? And I have this, and the reason I made that suggestion is I believe that's what happened last time when we hit 138. It was total baloney, right? They were just jamming it up just for fun, speculators, right? So here we are today. Who are the Hunt brothers of the uranium market? Well, it's Sprott Uranium Trust. They've bought 65 million pounds. And then you've got Yellowcake. I don't know what they're at, 25 million pounds. You add those two together. If it's 65, let's say plus 25 or 70, you're 90 million pounds, okay? And then in addition to that, you could tell from this recent deal with NextGen when they bought a few million pounds from the cap, there are a lot of speculators in addition to these ETFs, right? So you've probably got another, and it's anybody's guess, 20 to 50 million pounds have been bought recently out of the spot market. So, right, Sprott's 65 and Yellowcake's whatever Yellowcake is, 2025. And then let's say they're like, if cap had 2 million, well, you got to think there's bigger hedge funds out there than cap that's bought some uranium. So let's say there's another, let's say 30 million pounds have been bought. So we're sitting here at 120 million pounds of uranium have been bought out of the market in the last few years. And whoopee-doo, the price of uranium has gone from 50 to 85. And I'm going, whoopee-doo. And boy, that's a reason to get really excited about it. And this is the best part of it. The uranium market is this big, but the spot market is this big. And then out of the teeny tiny little spot market, people have taken 120 million pounds out of it in the past number of years. And the price of uranium is not $200. It's not $500. It's $85. So I'm going, come on, guys. Like, you're not nearly as good as the Hunt brothers were. You should be able to jam the price of uranium quite a bit better than this. And then people say, well, if you take it back far enough, uranium was $117 a pound. I'm going, okay, well, all right, well, let's go back to when, all right, so I'll give you let's say I forget when Sprott started, but I don't know when the big hedge fund started jumping on the table. But basically, everybody's trying to move the price of uranium up, and they're doing it in the most extreme way by going after the spot market. And the best they could do is $85. Come on, guys. If you're going to manipulate markets, you got to do a better job than that. So anyways, the super bulls are really mad. They're not quite as mad at me because what I said was actually true. When I was at $50, I said, I'm bullish on uranium. I was bullish on it from $17. I was bullish on it, but I'm not a super bull. I'm not a $200 a pound uranium guy. Not to say it won't go there, but just my view here on it is it doesn't make sense for it to go there, but who knows? It may. If it does go there, it'll be very short term. And because as I pointed out, and a lot of people got mad at me, I was going, guys, just do the math. There's 450 reactors. There's 50 under construction. They'll be finished in the next 5 years. That's 10 a year. Take 10 divided by 450. That's not a huge growth rate. And that doesn't include the fact that some of the 450 reactors will be retired. So if you want to get excited about uranium, it's not going to be from the demand side. So people say, well, Warren, I'm getting rusty here on the poundage, but it's something like 180 million pounds demand and 140 million pounds of supply. Well, there's a $30 to $40 million deficit every year, and that deficit's definitely gone now. I'm going, okay, well, if that was true, and you had speculators buying 120 million pounds out of the market, in addition to having a massive deficit, they're running out of uranium to sell, then why are we only at $85? How come we're not at 200? So anyways, and then I talked to the bulls. They really hate me. The super bulls hate me. The bulls, I think, can understand me. But then I go, guys, where were you guys at $17 when I was bullish? And it was like, where were you? You're now bullish at $85? Are you crazy? What are you going to do? Even if you get to $200, it's like just a little over a double. Like, isn't this party getting kind of long in the tooth? Isn't it come around midnight and nothing good happens at a party after midnight? Maybe you guys should just go to bed, go home, go to bed, wake up the next morning and find another party to go to. And now let's say that's the next thing. So that's a party I'm kind of leaving. I have one investment that's of any significance, which is in District Metals. Right. So the reason I like District is, they've got 1 billion pounds already drilled up. So to give you a sense what 1 billion pounds is, if they only mined 1 million pounds a year, it'll go for 1,000 years. Right. So there's lots of uranium there. The property right next to them, I think, has the Hagen deposit. I think they're around 800 million pounds. So between the two of them, you almost have 2 billion pounds of uranium in Sweden. And I believe by first quarter next year, the moratorium is going to be lifted and you'll be able to mine uranium in Sweden. And I think the black shale could be the future for uranium, because there's lots and lots of uranium in this black shale, and there's other important metals in too. So, and the other thing too about uranium, before I, start going which ones I like, is at $85, there was lots of other uranium discoveries made last cycle that are not in production because they couldn't function at $17 or $25 uranium, or even yeah. How many do you know are not economic at $85 uranium? Not many. Everything's that's the other thing where this is probably closer to the top than the bottom is everything is economic at $85, right? That I'm aware of. The only one I think that wouldn't be economic would be that whole seawater thing. I know last cycle there was a company that was going to extract uranium from seawater for an unlimited amount. I think back then it was a couple $100 a pound. So, anyways, so why would I? Am I not a super bull in uranium? I'm not a super bull because for some of those factors. But the super bull case, just to make as you know, the super bull case is there's going to be a short term shortage here because there aren't next gen's not up to operation. Cigar Lake and McArthur River getting old, and Kazatomprom just put some new taxes on their in situ recovery guys, and Kazatomprom is at a peak of production. They can't produce anymore, and they're not going to do the Olympic Dam expansion, and so okay, great. There might be a couple of years things are tight, but if I was the head of the U.S. Department of Energy and uranium started doing any stupid stuff, I'd pick up the phone to my Canadian counterparts. Says, those Sprott Uranium Trust guys? Yeah, we're just going to make them sell in the next 3 years, and we're going to also we're going to ban private ownership of uranium, and that'll lighten up. All the speculators will have 12 months to sell all their uranium and see what that does to the market. And that's one little move by the head of the U.S. Department of Energy. And I'm sure he's not totally stupid. He knows what he needs to do if there's ever any short-term spike with uranium. I'm sure all the utilities will come running and say, listen, you got all these guys trying to corner the market. Why don't you just use two things, or ban speculator ownership of uranium, like they've done that in the past. I remember back in 2008, the U.S. government banned me from shorting financials. I was short Morgan Stanley, and they make these bans from time to time, and uranium one would be a super easy one. But anyway, so I'm not a super bull in uranium. I like uranium; it's cool, but we're getting pretty hefty on the pricing here, where everything's economic. That's not the way the resource market works. There's always, you're never usually at the top of the price range there, where pretty much everything's economic. You don't stay there for very, very long. So, anyways, we'll see what happens. It'll be fun to watch. I'm not saying I'm going to be right. I'm just saying those are some of my thoughts, and that's why I only have one investment. It's District Metals, and it's more of they're going to lift can you imagine this? They have more pounds than NextGen, and they have a sub 50 million market cap, and the restrictions on mining in Sweden is going to be lifted probably early next year. I think it's worth somewhere between 50 million and where NextGen is. I don't know where, but I think District, when you lift the moratorium, will be worth more than $50 million. I'll stick my neck out on that. So now, what do I like? Okay, so about now you probably figured out, Luke, how I look at things. Well, I liked uranium. Yeah, I liked uranium when everybody else hated it. Now that everybody loves it, I hate it, or I don't like it as much. So the most hated commodity in the world today, or one of them anyways, honorable mention would be coal, right? I think coal is going to be a fantastic place to make a lot of money the next while. So I'm involved in Colonial. I'd like to get involved. I really hope Glencore spins off this metallurgical coal division. I think that would be a fantastic stock to own. Glencore, they're smart guys. They've got a tremendous asset now that they have Elk Valley and others. I think that could be a tremendous situation. There's no wonder that some of the big Glencore shareholders are going, hey, don't spin that off. We want to keep it. Because what happens is these big shareholders that own Glencore, they could own it because it's a metals company, future mining. They have some of the future metals, and they could wrap themselves in the EV, green metals, strategic metals, rare earths, all that sort of stuff, and they can mix a little bit of coal into that, and it's still acceptable. But if you take the coal out of Glencore and you stick it out in its own company, it's coal. And so many big institutions can't own that, and that's why I think the big institutions go, hey, don't get rid of all that cash flow, keep it within Glencore. So I really hope they lose that fight, and I hope Glencore spins it out because I'd love to own Glencore Coal or whatever they end up calling themselves. And then, of course, in the U.S., two other really cool ones to look at would be Alpha and Warrior Coal, and those would be the two ones. So as soon as we get this colonial out of the way, and let's hope it happens. I'm not saying it will 100%, but to have guys like smart like David and the Citibank team on it, I think and in the met coal market, it's pretty exciting right now. A lot of people want to own met coal, except for investors because there's so many ESG investors. So I love met coal. And so I think what I'm going to be doing is once I crystallize my shareholdings in Colonial, I'm going to be rolling up my sleeves. Hopefully Glencore spins off their coal division, but I would also look at Alpha and Warrior, and I'll roll up my sleeves and just I love buying stuff people hate, and they hate coal, but a lot of people who hate coal don't even know there's two types of coal. There's thermal and met coal, and met coal's amazing. It's amazing stuff. They're not going to replace it if ever but for decades, right? And use the mates to make steel. So it's a tremendous place to be. I love it. And I love it that everybody hates it. And it reminds me, again, I'm an old timer. I watched all the money people made owning cigarette companies when cigarette companies weren't cool. And big investors are saying, oh, no, we're ethical investors. We don't invest in cigarettes because they kill people. Well, the people who did invest in cigarettes to kill people made a ton of money. And because there were so many people didn't invest in them, they were super cheap stocks all the way through, and they kicked out tons of cash. And these coal companies are going to be kicking out tons of cash. I spoke with a really senior guy in the coal business. I had drinks with him a couple of days ago, and he was funny. He was saying how, this is absolutely true. Here's another reason: if you don't love coal, based on what I told you already, how many juniors have you been pitched, Luke, that says, I'm a junior, I'm going to explore for met coal?
Zero.
Have you ever? Your entire life?
No.
Has anybody?
No.
Nobody does it. Nobody's looking for met coal. So here you go. You look at the uranium.
There's maybe like one or two companies
in the entire
except
world, right?
Colonial in the venture exchange.
Compare that with
like
uranium.
You have Corsa Coal and the other one.
Yeah. Compare that with uranium. Like, who isn't looking for uranium now, right? So that's another indication as to why you may want to look at met coal, right? So that's one example. And then, of course, I mentioned nickel's cool. Nickel's amazing, man. Like, it just got cut in half, and everybody thinks nickel laterites are going to swamp the market. I love that. I love it that everybody hates nickel, because I know from a long-term perspective, I know how difficult it is to find high-quality nickel sulfides. And I know that this is going to be a strategic metal. The U.S. government wants this under Western control, right? Whether that be, through the Europeans or the U.S. But this will be a strategic asset. It'll be, it's in the dumper. You look at the valuations of premium nickel, and they're super cheap. So I love nickel and I love met coal. And I bet you nobody else in the world does, because everybody else is chasing uranium and rare earths and a bunch of lithium and a bunch of other nonsense, right? So anyways, how's that?
Yeah. Did you ever look into PGMs too much, or what do you think about that?
Over time, yeah.
Not really. It's a pretty depressed sector at the moment.
I'm not following them right now. The thing with why I don't like PGMs, and they're not my super favorite, is that PGMs, or platinum group metals, for anybody who doesn't know that, they're generally byproducts, right? Like, for instance, if you looked at premium nickel, it's nickel, copper, and PGMs, right? So we'll be producing PGMs no matter what the price is. So do you want to own commodities that get produced no matter what the price of it is? I prefer commodities that have primary mines for them. Like, in general, gold is a primary. Like, there's gold mines, and there's not, there's byproduct gold produced from copper porphyries, but in general, there's there's PGMs. For me, why I'm not excited about them is it's just too much byproduct PGMs being produced, and then of course there's also the risk of decline in the production of catalytic converters. So,
Mm-hmm.
anyways, that's sort of my view on that. What's your view on diamonds, Luke?
Yeah. On diamonds, I never
Yeah,
really looked into diamonds. I'm more
yeah.
into, well, PGMs at the moment because, well, it's mostly owned in South Africa, right? And there's a deficit at the moment, and it will persist into the future. And I think the EV trend won't happen as fast as many people think. And because platinum is at such low levels as well as palladium, it makes for a great case in this sense. And there are some within the venture exchange like Eastern Platinum. Yes, they own some debt, but if they get the mine up and running, it seems to be a good upside from there in that sort of sense, because a lot of cash flow will be coming. But it is sort of it's a speculative play, because you're also sort of looking into the future and essentially betting that the price will go up for it to essentially bring the great upside. But that would be like an approach if you were to look into PGMs, at least what I think. Yeah.
No, I can see that. No, I was in South Africa. I looked at I toured Flat Reef and saw some of the other big platinum mines, platinum palladium mines in South Africa, and South Africa is in serious decline, in my opinion, and
Mhm.
it's not full blown collapse yet. But when it does collapse, it'll be interesting to see how much of that mine production ever leaves the country, or whether the whole infrastructure collapses so bad they can't produce it. And I do remember, though, the Flat Reef that the Japanese bought into it. I'm not sure if you're aware of this. The Japanese bought, I believe, a 10% interest in Flat Reef, which is one of Robert
Mhm.
Friedland's tremendous. It's a tremendous platinum palladium situation, and they did it because they were not a believer in EVs. They were a believer in fuel cells. So to support
Mhm.
their car industry, they had made a strategic investment in Flat Reef for that reason. Yeah,
Mhm.
but anyways, we'll see what happens if catalytic converters collapse. Maybe there'll be some more hydrogen powered cars, because there's
Yeah.
apparently hydrogen powered cars have their place. I don't know where their place is, but apparently in some applications, hydrogen really works, and my understanding is
Mhm.
you need platinum for that. So yeah.
Mhm. Well, Warren, as we're sort of at the end of our interview, do you have perhaps anything that you want to highlight, or any last remarks, perhaps?
Yeah, well, it's a tough business out there, and hopefully, some you and your listeners and your viewers will do the work and make the money. And um, it's a tough market out there. To give you a sense of how tough it is, I just looked the number. I looked at the Toronto Stock Exchange Venture Index for the past 25 years. You could double check it yourself. It's down
Mm.
50% in 25 years. Not a lot of money made in this sector the last 25 years. So it's a tough sector. But I'm old enough to know I've seen some big wins, and I've seen lots of my friends make lots of money, and I made lots of money in Briax, and I've seen people make lots of money with Voices. And prior to that, what got me excited was some big money made in the big gold discoveries like Hemlo.
Mm.
And then prior to that, there was big money made in like Texas Gulf when they made the Kidd Creek discovery in Timmins. So let's hope we're definitely due for some fun times. So let's
Mm.
hope we have some fun times. I encourage everybody, do your work. It'll serve you well, and hopefully some
Mm.
of the case studies I've given you here could help people at least get a sense as to how I approach things.